The past week in the market and the absolute noise from the market that you'll have seen during that period. Let's just dive a bit deeper into that. Well, in the case of 1 week, do not be fooled from 1 week's worth of noise when you're an investor to make any rash decisions. Usually the rash decisions come from either significant rises, like Palantir and its deal with the UK government, CrowdStrike 15-16% up, people chasing momentum without a proper strategy, Tesla, or they come from significant falls and something which might be deep in the red, let's say. Unless you've got a clear-cut strategy, it makes absolutely no sense either chasing momentum, unless you want to gamble and you're just having a bit of fun. Because if you've not tested the reasons for your entry and exit and have some clear idea of why you would be doing it, then it's pretty pointless doing it. If we look again at this, the other mistake that clients often make from 1 week's worth of noise, other than to panic buy or panic sell, is, well, should I be rotating into Alpesh? There's been a good run from one to the other. Should we rotate or rotate backwards? You don't do rotation, whatever the heck you think that means, just off the basis of that. Have you tested the hypothesis about sector rotation, or are you just chasing? I mean, brokers love you, don't get me wrong, when you're that person. I've had stakes in brokerages in the past where I've been delighted when clients go crazy and panic buy, sell, rotate, or come up with crazy theories of their own, or also known as gambling. So if it's not that, what's the other critical mistakes that they often make? Well, a couple more I'll give you. Well, Alpesh, there's names I've not heard of which are in the green or not that well known. Let's go with lack of name recognition. Well, again, is that a strategy? Where did you come up with that from? Of course, you can come up with all sorts of theories why it might work. The opposite of that being big names must be rubbish because everybody knows them. They're staring you in the face. Yes, they stare you in the face. Doesn't mean you can't earn the big bucks from it. 25% of his portfolio, in the case of Warren Buffett, the world's, top 10 richest man, is in that company. Everyone's heard of it. It's not new. It's not secret. It's right in front of your face, but oftentimes people won't do it. What about these sectors, Alpesh? There's another problem. What about the sectors? Let's diversify amongst the sectors. Well, diversification is a discussion about correlation, and unless you've got the data on correlation, then just because something says communication services in the case of Alphabet and Meta doesn't necessarily mean it's different to consumer electronics, which is Apple. Actually, most people would think they're in the same technology sector. They're not. Well, take this. Microsoft, AI company in software infrastructure, when the markets fall, is highly correlated to Walmart and Costco. Crazy, isn't it? So very often the things you think you know about investing just ain't so. Well, Alpesh, why isn't my pension growing? Well, when you see some companies doing incredibly well, very simple reason. Your IFA or fund manager is putting you into funds which buy next to none of those growth companies. Why not? Because they can be quite volatile, and because they can be volatile, your fund manager doesn't want to own them because they're so focused on being dull, boring, and avoiding volatility for fear of scaring the horses that they would rather not give you the growth and force feed you low volatility by buying very little of these names. They'll buy a little bit, a little sprinkling, just to keep you quiet and keep the marketing department happy. If you want to get more insights from a hedge fund manager, subscribe for more. Thank you.